Hi, everybody. Welcome back to Ox Talks. Appreciate you watching the show today. There's quite a few things to talk about. We're going to address the current state of the housing market, and it is not good. Even on the heels of the Fed's 50 basis point rate cut yesterday, I'll get into two articles that explain how that fits together right now. Recording the show about 20 minutes before markets close, and they are flying high. The Dow's up over 500 points. It was up over 600 points earlier. NASDAQ is up over 400 points as well, over 400 points. I think 2%. S&P is up almost 200. Gold is up $27, $28 an ounce. Silver's up 80 cents an ounce. It was up well over $1 an ounce earlier today. So look, we're having the knee-jerk higher across all asset classes. Cryptocurrencies also, last I checked, Bitcoin was up over $2,000. So, yesterday's sell-off now, like I said, you always wait about a day for everything to digest. And the sell-off in the markets has reversed today. The sell-off in the metals yesterday after the announcement, again, has reversed today. And so look at the intended and desired effect of this pretty substantial rate cut move yesterday by the Fed, right? So that, people that don't really understand what's going on below the surface say, wow, things must be doing great. The economy's doing great. Consumers are doing great because look, the markets are up, metals are up. So let me discuss what's happening right now in the housing market. It does tie in to what we're probably going to see in the next year or so ahead in the existing home sales. First article out of Zero Hedge today. And by the way, guys, please like and share the videos with people so we continue to get the word out. If you're not subscribed to the channel, the channel is growing. I really appreciate you guys subscribing and joining the community. It means a lot to me. So Zero Hedge article today is the U.S. existing home sales tumble back near 14-year lows in August. It says existing home sales disappointed in August, dropping 2.5% month over month versus a negative 1.3% month over month drop expected, okay? Leaving sales down 4.22% year on year. There hasn't been a positive, it says, year over year sales comp since July 2021, as the existing home sales seasonally adjusted dropped to its lowest since October 2023, just a smidge, it says, above the weakest since 2010, going back over 14 years. Home sales were disappointing again in August, but the recent development of lower mortgage rates coupled with increasing inventory is a powerful combination that will provide the environment for sales to move higher in future months, according to National Association of Realtors chief economist Lawrence Yun said in a statement. Of course he's going to say that, right? But that's really not what is playing out. Well, I'll get to an article from Wolf Street here next to explain. So again, you're always going to have the industry leaders, the industry cheerleaders out in whatever the given industry is. In this case, we're talking about housing, and of course, pumping it up, saying everything is on the right track. So the chief economist from National Association of Realtors says that lower mortgage rates coupled with increasing inventory is a powerful combination that will push sales higher. It says the median sales price meanwhile increased 3.1% in the year through August. Median home sales price now is $416,700. And that, it says, is the highest for any August in National Association of Realtor data. A lack of inventory, it says, has been a notable headwind, with many would-be sellers unwilling to put their homes on the market and give up their sub 3% mortgage rates. The so-called lock-in effect has reduced sales by about 1 million homes a year, according to Mr. Yun. In August, NAR's figures showed 60% of homes sold were on the market for less than a month, compared with 62% in July. And 20% says sold above the list price, compared with 24% a month earlier. First-time buyers made up 26% of purchases, matching an all-time low. All-time low. So people are simply, first-time buyers are not making a move into the market, okay? They are dissuaded from buying a home, or they just can't afford to buy a home at these prices. Individual investors or second home buyers purchased 19% of homes compared with 16% a year ago. So that is the raw data on the existing home sales. I saw an article this morning also came out on Wolf Street, and this is interesting. It says Fannie Mae gets gloomier about home sales. Buyers' strike continues despite dropping mortgage rates and surging listings. It says the buyer strike is expected to continue despite much lower mortgage rates and a very sharp increase in active listings because prices are too high. Again, that is totally opposite what the chief economist from the National Association of Realtors just said in this statement came out of the Zero Hedge article that I just shared with you, okay? So it says, although mortgage rates have fallen considerably in recent weeks, we've not seen evidence of a corresponding increase in loan application activity, nor has there been an improvement in consumer home buying sentiment. And that's according to Fannie Mae in a report today, lowering its forecast. This is regardless of the lever, we expect affordability to remain the primary constraint on housing activity for the foreseeable future. And we now think full year 2024 will produce the fewest existing home sales since 1995, according to Fannie Mae. So now we're talking about almost 30 years ago, okay? We're going to have that few existing home sales in this country. According to the Mortgage Bankers Association today, the average 30-year fixed mortgage has dropped to 6.15% in the latest reporting week. That's down by over 1.6 percentage points from the rates 10 months ago. Fannie Mae today estimated that the 30-year fixed mortgage rate will average 5.9% next year, and it's already fallen to 6.15% from 7.9% in November last year. It says, despite significant decline in mortgage rates and improved supply in some parts of the country, existing home sales are not expected to pick up meaningfully through the remainder of 2024, with the annual pace now forecast, like I said, to be the slowest in basically 30 years. Demand for mortgage has collapsed, it says, despite the much lower mortgage rates because prices are just too high. And people are waiting for even lower mortgage rates and lower prices and for their incomes to rise while they wait for mortgage rates and lower prices. So it says people are waiting for their incomes to rise. That's not happening. They're waiting for even lower mortgage rates and lower prices. So leave your comment below. People could be waiting for a very long time for those three metrics to fall into place, if that is in fact what is constraining the situation. There's another article, or another CNBC article I saw a few minutes ago. I did not print to share with you. You guys can check it out, where Jerome Powell made some comments yesterday about the fact that the Fed really doesn't really have much control over the housing market. But he was making some comments about the utter lack of inventory going forward. The housing demand is going to far outstrip the available inventory. So I don't have any opinion on that. Leave your comment below if you think that's true or not. I'll leave it there today. The housing market has major issues. And again, people are not going to give up, like we shared in the article, a 3% or sub 3% mortgage if they're simply moving to a larger house or a different house, because even though rates are dropping, they're still going to be in the high fives, low sixes, okay, for the same mortgage that they're now selling out of at 3 or below 3%. And they're probably paying more and getting less house. So you guys, love to hear from you. I appreciate the interaction, the support for the channel. Again, if you don't mind subscribing, hit that subscribe button, a thumbs up button, and the bell notification as well. Have a great rest of your day. I'll talk to y'all soon. Bye.